All right. So welcome to another episode of the podcast. If you're listening on your favorite directory, be sure and leave us, if you can, a 5-star review. If you're watching us on YouTube, be sure to subscribe to the channel and hit that like button so you can keep supporting us and we can keep bringing interesting and cool conversations like the one we're going to have today. So Ed, I want to thank you for coming on the podcast. I know it took us a while. We had to reschedule. You were busy. I was busy. And I don't know if that's a background, but are you in Miami right now?
I'm in Miami. I'm in
Okay, cool.
Miami. Yeah,
Cool,
yes, sir.
but that's not your office view, right?
This is not the office view. This is a property that we did a deal on, and I'm in love with the view of this property.
Nice.
And
It is
I
nice.
I took one of the pictures of it, and it's now my background.
Nice. Is it hot down in Miami right now? It's getting a little cool in Jersey, but
It is. Well, it's hot out of here.
it's always hot. I know. Florida's always freaking hot. All right.
We can say whatever we want, but it's
always hot because it's humid. Okay, so I told you I want to go back to, because I know, growing up and your whole story, you were giving me your entrepreneurial story when we first spoke, right? Yep. Maybe we can go back there and start when you were younger and how you got into it. And then we'll talk about BPN when we get further down the road.
Got it. So my days as an entrepreneur started very young. My first business was when I was 10 to 11.
Okay.
And I failed.
In the United States or?
No, in the Dominican Republic. My first business was a hot dog stand.
Okay.
And at the beginning, I faced a lot of failure, you see, and it kind of exposed me to wanting to get better at it, right? So then I saw that through debt, I could actually advance the opportunities and be able to grow.
When you're 11 or 12, though, I mean, aren't people just supporting you? They're like, well, he's a little kid.
Oh,
buy his hot dogs.
Not really. This is, I mean, understand I come from a family where there's 3 professions that kind of stand out. It's either you are a lawyer.
Okay.
You are either in the police or law enforcement.
Okay.
Or you are an entrepreneur in the sense of they have supermarkets, mini markets.
Right, like shops and stuff.
Shops, yeah.
Yeah.
And that's the background from my mother's side.
Okay.
And I had the brilliant idea when I was 12. One of the mini markets was right in front of the school, right?
Okay.
Now, from Monday to Friday, I had great customers. All the students, when they came out of school, guess what? I was hungry, which is how I came up with the idea. Every time I got out of school, I was crazy hungry. So it's like, well, if I'm hungry, I bet other kids are.
Yeah.
So I set up a hot dog stand right in front of the school.
Okay.
And pretty much I had a lot of kids coming in and out Monday to Friday.
You were right. They were starving too.
Correct. Because we were all starving, right? So I could get a discount from the mini market on the bread and the
right. Because you knew the owner.
It was my mom. It was my mom. You know?
Right. Okay. So she
my
gave
mom
you
owned the shop. Yeah.
Right. Of course.
So pretty much I was getting the stuff wholesale.
Right.
And then when I started wanting to replicate, I remember it's the second time I asked my grandfather for a loan.
Oh, so you were going to open other hot dog stands?
Yes, I wanted to spend, right? I wanted to, because my family had a lot of mini markets.
Oh, so you're like, I can be in front of every mini market they had.
Correct. So I'm like, if I'm killing it here,
I
should be killing it in all those other places, right? So I go to my grandfather a second time. The first time I got a loan from him, I paid him back. And I made it. I failed a lot. And that's why I wanted to say that I want people to understand that failing was what pushed me through. At the beginning, for me to open the hot dog stand, I asked my mom and she's like, why you need money for? Like, you work at the mini market and we pay you. Like, you're not content. Yeah, you have a job. You're not content with what we're paying you.
You're only 12.
I mean, and I go, but I believe that this could be a good thing. You know, I can make extra money and I want to do my own thing.
Right.
So my mom said no to the loan. Then I went to a couple of my mother's siblings. They also said no. And then my last resource was my grandpa. Okay. So I took all of the rejection that they gave me and had an answer to all of it when I went to grandpa, right?
Okay, right. Because you ask enough people, you learn and you figure out what they need to hear and so you can get a deal.
Correct. So when I go to grandpa,
your first
before
venture
he even,
capitalists. Yeah.
correct. So before I even started the conversation,
Yeah.
He asked me, "Are you coming to ask me about this loan you've been talking to?"
Right. The whole family. He knows about it. Of
He's
course.
heard
It's
the
like,
story.
why are you coming to me last? I'm your last resort. Right.
So I go, "Well, listen, grandpa, this is the thing. I give you my word that if the business fails, I'll work to repay you. Like my grandpa had a distribution center.
Okay.
It was one of the biggest in the whole family.
Okay.
And I told him, I'll pay you work, whatever it takes. If you tell me it's going to be 3 months, every time I go to school, I will go to the distribution center and I'm paying you work until you believe I have not paid you. I will keep coming." And he goes, "Okay, I'm liking the sound of that." So I gave him something that was collateral, right?
Well,
I
you had to offer, right?
Correct.
Yeah.
So I had time and I gave him that as collateral.
Okay.
So my grandpa ends up lending me the money. And that's how I started with the first. Then when I went to the second,
right,
obviously it was a higher amount of money because I wanted to open another 3 at the same time.
Oh, okay.
So he goes, "Okay, it's going to be a long time if you have to pay me this back with work."
Right.
And I go, "Well, grandpa, the reality is I'm only asking for you to lend me about 40% of what I need because I already have the other 60%.
Because you're making money on the first.
Because I'm making money on the first one." And I'm like,
right.
"Listen, look at it. I'm killing it." Right.
Yeah.
So
now, what did you need, Ed? What did you need to open the second location? When you need like a table, a kid to work for you, and supplies?
That's accurate. That's accurate. Okay. So I needed to have coverage for every single location. My highest expense was the employee, right?
Yeah, right.
Because at the beginning, I needed to assume that the hot dog stand was not going to make any money, right?
Okay.
Because people needed to get accustomed of seeing that kid there selling for at least 3 weeks.
Oh, it took that long for them to go, oh,
yeah,
okay.
Yeah, for them to notice, oh, there's a guy that sells hot dogs there.
Oh, yeah.
And this was based on my previous model of how I experienced in the one I had, right?
Right, you had the same problem.
Correct. So obviously I needed to have the salary that I was going to pay that kid. Right. That after he left school, and mainly they were my cousins, right? So
right. Okay.
It's like, listen, you're doing nothing with your time.
Right. This is free money for you.
This is free money for you. And you're gonna have fun. You're gonna meet other kids.
Right.
What the hell? You know, what other 12, 13-year-old gets to do this? So we were all excited. So I went to 3. Long story short, I ended up having 32 hot dog stand by age 15.
32?
Yes. And
okay.
I did that with a lot of pride. I love every minute of it. I learned a lot. And
how did you distribute? Did each stand just buy the supplies from the store that they were at? So you didn't have to.
Correct.
Yeah. Okay. That makes sense.
Correct. And then my biggest challenge was the weekends were slow.
Right. Because schools are closed.
Because the schools are closed. And those that's my client.
That's your customers, right? Of course.
Yeah. If my customers now walking by the school,
right?
Who am I going to sell to, right?
Well, wouldn't you be closed on the weekends? And you have to pay the employees, and you have to buy supplies. They just open during the week.
Well, but the weekends in my country are like, if you can make something happen on the weekends, you're set.
Right? Okay.
So what I did is I created a Domino's club.
A what?
People use Domino's club. Like,
oh yeah, Domino's.
I bought Domino's table, and assuming, well, if I have them in Domino's tournament, and I started that.
Was that big down in Dominican?
Yeah,
Domino's are big.
We're big Domino's fan, right?
Wow.
We love playing Domino's. So what I did there is I created a tournament. It was free to sign up, and you will compete, and if you win, there was prizes, right? Like if mainly there were adults, the people that play. So I will buy a box of beer that brought 24 beers, and the winner takes a box of 24 beers home.
Okay.
But guess what? While they're playing, sooner or later they're going to get hungry, right? Of course. And here I am,
right,
with hot dogs.
It's a setup. The whole thing's a setup.
Correct. They don't know it yet, though.
No, of course not. That's what's great about it.
That's the whole deal, right? I'm here, and again, sooner or later they're going to get hungry.
And how'd you buy the beer? There's no like drinking age in Dominican? You just buy whatever you want?
Again, the people that own the shops.
Oh,
where I
they
was at
sold
were-
beer.
They sold beer,
Oh,
right?
okay.
So the reality is, I'll pay it, and the ones
Yeah, you
consuming
get
it
whatever
were
you want.
adults.
Right.
Yeah.
So it
The
wasn't like
ones
you were
consuming it
drinking.
were adults, so there's nothing illegal going on.
Okay.
So it grew, like Domino's Club group, and people started coming to watch.
Right.
So now, not only the guys playing are buying hot dogs.
Was
Now
this
the
at all
Domino's.
32 locations? You were doing Domino's clubs?
I started at one, and
Right.
the Domino's Club successfully happened in 13.
Okay, well,
All
that's a
the
lot.
others were very hard for me to stick with the model because there were not a lot of folks between 30 to 45 around those areas that were doing that.
Got it.
right? So in the others, I was only open Monday to Friday. But guess what? At the 13 that the Domino's Club worked, overpassed my revenue than all the others combined.
Wow.
Only on the
So the
week.
weekends, yeah. So there's a lot more people buying hot dogs than
So it
school.
went from, of course, it went
Yeah.
from because I was rotating people, right? So for you to participate in the Domino's Club, you needed to sign up.
Right.
This was very organized. You needed to
Right.
sign up a week before,
Yeah.
and
So you knew how
needed
many
to-
people were coming. You'd be ready with
Of
your hot
course.
dogs. Yeah.
Of course, yeah. So it was very, very interesting.
That's a great
And that's-
entrepreneurial story.
That's how we all began, my friend. That's
Okay.
how we all began.
So
then
did
my-
you when you said till 15, did you sell the business?
I
What did
ended
you
up,
do?
I ended up, so my brother, who was based in Miami, big in real estate, sees all of this,
Okay.
asked me, how much money are you making? How much money you have? I'll tell him the amount. And when he goes, shit, at 15, that's a very reasonable amount of money.
He's
And
older
he
than you?
goes, he's 10 years older than me,
So
exactly.
he was 25. Okay.
Yeah. So he goes, why don't you, I want to bring you out of Miami, and I
Okay.
want you to look at what I'm doing here. And pretty much from there, he took me under his wing, and it's like, you're wasting your talent here in the DR. You need to come to US.
Okay.
Yeah. So he brings me to US, and it was amazing.
And
It
you had
was-
what? You still had a few years of school left too. Did you finish school up here?
I finished school in US. I
Okay.
finished 11th and 12th grade in US.
Okay. Right. 15. Yeah. Okay.
Yeah. And pretty much then got into real estate, then got into quantitative risk analysis.
Yeah.
and
You
then
telling me.
into
So did you go to school down there? College?
I went to school. I went to college here in Miami.
You did. Okay.
Yeah. I went to college here in Miami, and
Did
fell
anybody
in
take
love-
over the hot dog business after you left the
one of my
country?
cousins. One of my cousins.
Did they do as
so-
well as you did or no?
They were not as determined
Creative.
as I was,
Yeah,
right? So
Right.
by month number 3 after I moved here, obviously the thing's still working as I left it, because it's a very short period of time. He now gets 50% of the shares. I'm getting 50% of all the revenue. And he now asks his dad, who's owner of one of the mini markets where the Domino's Club's taking off, and his dad and him bought the whole thing from me. And
Oh, so you got bought out.
yeah, so
Nice.
I left it to the two of them. About 3 years later, they only had like 5 left.
Yeah, just
Oh.
that's not you. It was because of you. It wasn't because it was
Yeah.
some brilliant idea
Yeah.
that's going to work for anybody.
Yeah. Which, at a sense, I don't think it was me making the thing work. I would think it's maybe the approach that I had. If they would have kept the same drive, because I kept the kids that I had working for me,
Right.
I never saw them as employees, right? I saw them as an extension of me. And
Got it.
regularly, people get lost
Yeah.
when they think that because you're selling something, that's just it. And they make it very transactional.
Right.
There is people that used to go buy a hot dog, not really because they were hungry, but because they were used to going by and talking to the kid that was selling the hot dog, or maybe talking to the other people buying the hot dog.
Right.
But that all changed when I left, because now they were controlling the kids' time, yelling at them if they open late, which again, it wasn't that if someone opened late 3 times, I was going to call them and say, hey, what's going on? Is something wrong? I mean, you had a family emergency, or are you struggling in some way?
Right. Well, you're a better manager than they were. Yeah.
These guys were not doing that. These guys were, oh, you opened 3 days late, we're going to discount this from your salary.
Yeah. No,
or we're gonna cut you off, right?
Yeah.
We're gonna replace you and get somebody else. I only had to replace 3 people. And mind you, by age 15, and some of my employees were adults. Like after I grew, I had employees that were adults.
Oh, okay.
That were not kids,
Yeah.
and the reality is I always have the mindset of, again, they're not my employees. They don't work for me, they work with me.
Yeah, no, that's a good attitude. And that makes you a better manager.
Correct.
Yeah.
Correct. So I think that's really, I don't think it was me. I think it was mainly the approach they had that
killed the business.
That killed the business. Because
Right.
again,
They could have
people
done what
still
you
eat
did.
hot dogs for
Right.
Christ's sake.
So they could have done it the way you did it, but they didn't, and it killed the business.
Correct.
Got it. All right. So you came to the States, you finished up high school, and then you got your real estate license and you started selling real estate, or?
That's accurate. So then I got my real estate license, started selling real estate, got into risk
While you're going to
analysis.
college, you went to school and
While I'm
same
going
time?
to college. That's accurate.
Okay.
While I'm going to college.
okay.
So now I have someone that took me under his wing, which is my brother, who's 10 years older than me, who's very bright, and pretty much says, you got to learn this because you're very bright, and I believe you could do very well. And 5 years into it, I met a lot of wonderful people. I met a couple people that loved the drive that I had for what I did. And one of them introduced me to quantitative risk analysis and took me under his wing. Had over 40 years of experience in that space. And from there, it was all history. I fall in love with it. I always loved math. And I always love thinking how things can be done better and fixing things. I'm a fixer. I like looking at the 1,000 ways that something can go wrong.
Yeah, well, that's why maybe you're successful in the hot dog business, because you figured it out and you figured out how to do it. So did you study any of that at school?
So that's what I was going to school for. So I was doing business administration school. I was a double major. I was also doing political science because I wanted to be an attorney again, following the family.
Right, of course.
One of the
You're better off, trust me, you're better off.
Correction, professions. And but then while into it, I did an internship at a law firm, and then saw that it was not really who I was, right?
Yeah, no,
and saw that it was not what I wanted to do with my life, right? So after that, I was like, you know what? Law school's not for me.
Right.
It's not going to work. I had a challenge also that while going to school, another experience that was not, I would say, it was an entrepreneurial experience, but I didn't do it for money. This one was done out of necessity. So while I'm going to college, I figure out that I was being ripped off.
By who?
By buying books from the college bookstore. So
yeah, well, no, not like just you. You mean everybody,
right? Everybody. So I get upset. I tell my brother, and he asks me, "What are you going to do about it?" And he goes, "I'll figure something out. This cannot keep happening."
Right.
So 2 weeks in, I create this little club. I put a ton of posters around.
Now, what was the problem
Well, the problem is that I went to buy my test books.
Right.
And once I bought one wrong because the professor had given us the wrong code. And I went to the bookstore and I go, "Listen, I bought this one wrong. It was only a couple days ago. It was like 7 days ago. And they had a return policy of like 3 days. So I meet the return policy by like a day or two. And they go, "Yeah, we got to buy it back, but we'll only pay you 40% of the value of the book."
And the book's brand new, and it wasn't even your fault.
No, I'm like, the book's brand new. Are you mine? Are you insane?
You didn't even open it, right?
No, the book is not even open. Like, what are you
Right.
talking about? And he
Right.
goes, so I asked the guy, so what if another kid comes in right after I sell it to you at 40% of his value? How much is that kid going to have to pay for it? He goes, 100% of the value.
They
And I
would sell
go,
it for full value.
yeah.
Oh,
And I go, isn't that you're ripping me off. You're ripping people off. How is that fair?
right. It's
And he
wholesale to
goes,
retail. You're selling it
yeah.
wholesale. They're selling it retail. That's why.
So he goes, listen, kid, I'm just an employee here. You
Yeah,
know?
right. He had no control, right? He didn't. What are you telling
I
me? What
just
are you
do
telling
whatever
me
they
about?
tell me to do.
Right.
Don't
He's
take your
making
frustration.
hourly. Yeah. It's not an entrepreneur like you. He's not.
Yeah,
There's a
don't
big
take your
opportunity here. He
frustration out
doesn't
of
even
me.
recognize him, right?
Yeah.
No clue.
Yeah. So first thing I do, I go to the dean.
Okay.
I explain my case. They go, Ed, this is a nonprofit and we need to be able to bring money in, you know? And I'm like, no, this is not a nonprofit. You're ripping us off. It's not fair. And the reality is, you should be helping us to go to school, not penalize us and doing all of these tricky things to make money
Yeah.
out of us.
And this is
So
true
they-
at the end of the semester, right? You could have a book, and if you go to return and
Of
sell it
course.
back, they always make a big spread.
Correct.
Okay.
So they go, Ed, you're talking to the hand here. There's no way we can change the model. Like
Right.
this is
This
it.
is the way it's done. Yeah.
It's the way
All the
it's
schools
done.
are like, they still do that.
Yeah.
Yeah.
So then I create this club and I put posters all around the school, and we meet every Monday of every semester or every Friday of every semester. And at the end of the semester, either Monday and Friday as well. And we will exchange books, right? Let's say you had managerial accounting.
Right.
And I was going to go to biology or to human development, for example, right? Which are basic classes. And I did it last semester. You're doing it this semester. You have the books I need. You have the books I need.
And
so
you
now
do
we
an
can
exchange.
trade.
Right.
Correct. Now we can trade, and it's not going to cost us 60% devaluation on the book.
Right.
Let's say I didn't even have the book. Well, now instead of selling it for 40%, you could actually sell it to another kid for 60. You made a little bit more money, and that other kid just saved 40%. So
right.
it was
you could
a win-win.
Undercut the
Yeah, it was a win-win all around.
Right.
Now,
but you need an
mind
exchange because usually it's not a match, right?
Correct.
Between what you need and what
correct.
I need.
Correct. Yeah. And in some cases, it was just, I need this, you have it, I give you money. Right. So a couple semesters go by, and I get this interesting letter from the college saying, I'm going to get what is called a reprimand letter.
Because why? You're not allowed to do this?
And I go, okay, I don't understand.
Yeah.
Like, I created a system to help my peer college students.
Yeah.
And I'm not making money from it.
Right.
Like, you cannot even say I'm soliciting because I'm not making any money out of this.
Right.
And they go, Ed, you're going to go to law school, read the documents you signed when you came into the institution. And you'll see there that you are not allowed to compete with any of the services we offer or solicit, because even though you say you're not soliciting, you are, because you're posting your posters in our bathrooms, in our cafeteria, in our bookstore.
Right. So you're competing with the bookstore, basically.
So you're competing
putting
with
the flyers
bookstore.
up in the bookstore.
Yeah. I mean,
That's good.
I'm like, I want to help the kids. I mean,
Right.
I'm gonna put them wherever I can. Right.
Yeah.
So they
shut you down, basically.
They shoot me down, and I go, listen, you don't know what you're doing, and understand something. I'll finish this semester. At the same time, I was also doing the internship at the law firm. So now I'm having doubts that I really want to become a lawyer. So I'm like, you know what? I'll finish this semester. And after this, I'll study, but not to become anything. I'll study whatever courses I decide I want to study to learn. Not because I want to graduate
just to
and
get
become
your
a lawyer.
degree and learn
Correct.
anything you wanted to learn. Okay.
Correct. So second time they asked me in, they tell me, listen, you're not posting in the school, but you're still meeting kids outside the school. So they told me I cannot meet them at any place that was related to the school. There was only one place that meted that criteria, and that was McDonald's. there was a McDonald's a couple blocks around the school where that was not their property.
Okay.
So
So
I'm like, whoa,
the compete was on campus, basically.
correct,
The
correct. It's on
non-compete. Okay.
campus. So I
Okay.
found a little loophole.
Yeah.
So then they said, yeah, but you didn't know this little fact. We own the land where the McDonald's is at.
Oh, they lease it to McDonald's?
They were leasing to McDonald's, right? And
Oh, shit.
even though it's kind of like a partnership because it's an 100-year lease,
Right. Yeah, it's a lease
they
back.
it's a lease back, right?
Yeah.
So I go, this guy, the devil is in the details. So I, now frustrated, I decided to take the whole business online.
Okay, that's a good idea.
It took me 2-3 weeks to come up with, I got to take it online because they can do anything against me if I do it online. So I create a website called Blast Books.
Okay.
And pretty much it grew like fire. Like 7 months in, I had millions of members now.
Really?
Like my school was complaining because I dropped their sales by like 40-60% within the time I was doing what I was doing.
Just locally, though.
Just locally. Now
Right.
I'm affecting other places that are not even in Florida.
Right. Because people are like, oh, wait a second. We're taking the same course.
Yeah.
Using the same textbook in University of Texas. And then
Yeah.
you go,
yeah.
okay, fine. We'll switch from Miami to Texas.
Yeah. So it became a lot bigger than I ever intended to, right? So now when it hit 9 million members,
9
now
million?
Yes.
Okay.
Yes. Now I'm looking at it differently. Now I'm like, fuck, this can become
This could be a business. Yeah. You got a lot of use. Just the users. That list is probably worth money.
Yeah. So now, mind you, zero advertising. This is all word of mouth.
So just like somebody found it and would tell somebody else about the website, and that grew to 9 million members. No
Yes.
advertising, no social
advertising.
media, no postings, nothing.
I was posting on Facebook, FYI.
Okay. That
was it. That was it. So now I decide, you know what? I'm going to study this market because if I have done this organically, imagine what I could do if I actually invest money into it. And now I treat it as a business instead of just fixing a problem. I'm a problem solver. That's how I see myself.
So you weren't even making money. Like if I'm in Texas
No.
and my friend is in North Florida and we exchange books, you didn't make any money. So how
No
did
money.
we exchange the books? You just got each other's address and we mailed the stuff and you weren't involved.
So pretty much I taught myself how to code. I created a little website, very basic, on a software called Joomla, which allows you to build social medias on top of their platform. So I created something similar to any of the other social medias that were active back then that allow kids to chat, allow them to post pictures, allow them to, but the intention of the whole thing was you have a book that I need,
Right.
and I'm willing to pay you $50 for it. And in the bookstore, it costs $75, $100, right?
Right.
So what was one of the biggest challenges that I solved was that the reason they could rip us off of school was because they allowed us to use the money that kids get for financial aid to buy books. Right. So now I see that as a problem because I cannot compete there. So what I did is I reached out to PayPal and pretty much told them what my problem was and who I was competing with. And PayPal goes, you're not going to believe it. We just pull out something called Bill Me Later about a year and a half ago. We want you to look at it. And in reality, the reality is we can give you the API. You can have it on your website. And we will be willing to lend to your kids for 6 months, interest-free, like zero. We won't charge them a dime. And it costs you nothing.
Right.
And
That's become a big industry now. Pay as you go with no interest, you know.
That was
the merchants
kind of the beginning of the whole thing, right? So when I add that to the website, now that became more attractive because I had kids coming in to take advantage of exactly that. Now they can wait for the financial aid money and pay PayPal after they get the money instead of having to pay triple for the book at the bookstore at their college.
Right. Yeah.
So now I filed for trademarks. And
what was the name of the business?
Because now it's not even a business. Now I form a company. I'm making no money, right? This was This was something that I did to solve a problem that I
For
had,
yourself, right?
and that I saw that my peers,
Right, but you're a
students,
business guy. That's what you
yeah,
do.
yeah.
So what
So
was
I
the
saw
name of
that
the
my
company? What was it called?
Blast
Oh, you'd mentioned
Books.com.
that at the beginning, right? Blast
Yeah,
Books. Blast,
blastbooks.com.
BLAST, Blast Books.
Yes. So
Okay.
Blast, BLASS. So blast mean fast in Greek. And I had a Greek guy back in my country that used to call me that. I used to play baseball and I was very fast and he used to call me Blast. So
okay, well, there's a story there.
Yeah. So pretty much that's where it came out of. And then books, because that's where the kids were trading, right? They were trading books.
I thought it was like blast books, like we're blasting off and leaving these guys in the dust. Okay. All right.
So 3 months in, I get now subpoena from Facebook.
From Facebook?
Yes. And I'm like, wait a minute, why in the hell are you sending me a subpoena? So when I open it up, I look at it, it's a demand letter. And they're saying that I have an
cease and desist letter?
Cease and desist. They say that I have an infringement on their mark because the name of my business is Blast Books and the name of their business is Facebook. And I go, yeah, that doesn't add up to me because I'm allowing kids to trade books. And yeah, I can see you seeing me as a competitor because I'm going to make money in the future, maybe similar to how you make money. But the reality is I only now have 9 million plus members. You got billions of members. Like,
right. So Blast Books was one word?
Yeah, it was all one word.
But books with an S, right?
Books with an S.
So did you apply for the trademark and then they were opposing it?
And then they were opposing it.
Okay.
Yeah. So pretty much we went into a legal battle.
Obviously, you went to a legal battle with Facebook?
Yes. Yes. Okay. Obviously, they had a lot better resources.
Yeah, you think?
I was young and stubborn. So it took 3 years for me to figure it out that I was never going to fucking win.
Right. Of course, because they just have money. I filed for a trademark for the podcast. And sure enough, I get a cease and desist letter from Entrepreneur Magazine and entrepreneur.com. It's the same company. And anybody who uses the word entrepreneur, they go after because they want to protect their mark.
Yeah.
So eventually I agreed to just withdraw the application and I just continued to operate. I don't care. There's other words, but yeah, I mean, that's one of the problems is that they just have money.
That's the biggest problem.
Even if you're right.
Even if you're right. So pretty much I saw that their strategy was not really to win. Their strategy was to draw me on legal fees and all of the BS and stand it.
But they don't sell books. It's one thing if Amazon was saying, hey, you're selling books, you know?
Yeah, they don't. So pretty much we ended up settling privately. And that was the end of Blast Books. Then
it ended, you shut the whole company down?
Well, soon after they came up with Facebook Marketplace.
Oh, and you could exchange things right on there.
Right. So I'll leave it there because it was
like eBay, basically.
Correct. Yeah. So and we ended up on
that should have been your idea. eBay started with books and grew from there.
Yeah. So pretty much that's that. Then after that,
how old were you at that point, Ed?
Shoot, I'm 23.
Okay.
24.
So you're almost the end of school, or you're already out of school.
Yeah.
Right?
Yeah. So the most stressful years of my life, I could say.
When you were dealing with Facebook?
Yeah, that legal battle, pretty much.
I'm sure.
But I learned a lot through it because in our discoveries, yes, I had to share all my documents with them, but guess what? They had to share all of the documents with me. Yeah,
you got to see some stuff you wouldn't normally get to see.
And here they're dealing with a junkie on the other side that loves reading and that truly wants to understand how they made a huge monster, right?
Yeah.
So I got to see stuff that maybe nobody else has been able to ever see. And I was asking for particular stuff. I want to see this. I want to see this. I want to see this. I want to see that.
And they would send it?
They will send it.
Yeah. Yeah, because if they're the ones making the claim, they have to provide evidence. Right. Exactly.
That's accurate. That's accurate. So I mean, even though it was stressful, I learned a lot from those days. And then 2013, I literally get introduced to blockchain.
Okay, it's like 9 years ago. That was early on.
Yeah,
Yeah.
Get introduced to blockchain, fall in love with it.
Yeah, because
one of
that's you math and the whole thing. It took me like 6 years just to understand what it is. I think I'm just understanding it.
Well, in my end, when I saw it, I'm a practical guy and I like understanding what I do. So the first thing I said is I'm going to start mining. And that's
Okay.
how I started.
Okay. When it was
Sorry,
just Bitcoin, right?
I was mining Bitcoin, Ethereum, and Litecoin.
Yeah,
So
but you need a lot of computing power to do that, right?
so on Ethereum, I already knew how to code and I already knew software
Okay.
and hardware. So I started building mining rigs with GPUs myself to mine
Okay.
Ethereum, right? To try and error.
That gets
FYI,
mined also. They all get mined like Bitcoin, the same type of thing.
Yeah, Ethereum used to get mined. Now they're going proof of stake. They just have gone proof of stake, but it was just proof of work, just like Bitcoin in the past.
What's proof of
And
stake versus proof of work?
so proof of work is you have to have a machine mining to discover the transaction, right?
Okay.
Computing power, competing to find
And
the
you have to
result.
prove that you did it.
The machine, right?
Machine,
does it.
right, which you own.
Yeah, correct.
Right.
Which I own. So whatever that machine made was mine.
Right.
Now, proof of stake is different because all I have to do is just hold that token and stake it, right? So
Okay.
it's like, let's say you and I decide to become and stake Tezos, for example.
Okay.
So the network will reward us for staking their token and pay us similar to mining a reward for
Like a
staking
commission.
like a commission or like a dividend, right?
Yeah, right. Okay.
And that's the difference between the two in simple terms, because if we go into the
It's too complicated.
technical things, it's too
People
complicated and people get lost.
Right.
So
right.
yeah. So now
That was
on
9 years
mining,
ago. That was
that
nine
was
years
9
ago.
years ago. That was
Okay.
9 years ago. So after I truly understand the technology, I saw that crypto was just an application, right? You see, you know how is it that I saw it? I looked at it as the internet and Yahoo. If you go back in time and you ask people in the 1990s what was the internet, you were gonna get a 70 to 60% chance of people telling you Yahoo was the internet.
Yeah, there was no Google in the early 2000s.
No,
late
so they will
90s.
tell
No.
you Yahoo was the internet, right? Is Yahoo really the internet? Not really. No. Yahoo was just an application.
It was a search engine at that time, right?
Correct. That worked with internet.
Right.
It's the
just
same
like
with
Netscape or Internet Explorer. They're just browsers to look at the internet.
Pretty much. Same example with blockchain and crypto. Right now, if you ask 1,000 people what's blockchain, 90% of them are going to tell you crypto.
Right, of course, but blockchain it's just a way of verifying transactions. I see people using it now in the real estate industry. They're working on legal, where contract, because I do contracts, Ed, and I go back and forth. I can't keep, even though I'm writing version 2, version 3, you lose track, and then somebody sends you something, you have no confidence that it's the same document that you sent them. And you got to go through the whole thing and make sure they're not screwing around with things. If it was blockchain, I wouldn't have that problem.
That's accurate. That's accurate. So I took a step further, and what we done is we built a platform that allows a small family offices or family offices in general, accredited investors and funds, investment banks, to sit at the same table that the funds that are managing $5 billion, $1 trillion, sit at, even though they don't have that kind of capital power, right? So, and how we did that is we created a platform to securitize interest in multiple industries. So I give you an example. The first deal that we did in real estate was a commercial mortgage-backed security. That was the first structure, right? And
just for people listening, that's a security that's created and it's collateralized and backed by mortgages on probably more than one building, right? Multiple package of mortgages.
That's accurate. So
Cash
in this
flow
case,
there and whatever. Yeah.
Correct. So in this case, we only used one because we
Okay.
were just testing it.
Okay.
And it was just the structure, right? That's all. That was our service. We provided the structure and we provided the platform where it can happen.
Okay.
And the story got picked up by CoStar, which is a
Okay.
very large
Yeah.
data company for banks directly.
Right.
And it got so much traction and more than we expected, right? So the deal gets done. Financial institutions end up coming in and offering better terms than what we're offering and taking the deal. But because we put it together in the way that we put it together, right?
They liked what you were doing.
Correct. So now we're doing the same. Imagine someone that's going to go and purchase a commercial mortgage-backed security in the secondary market must have hundreds of millions, if not billions, because they're going to buy a chunk. They're going to buy multiple mortgages packaged together in one instrument. Now we're giving opportunities to one guy, accredited investor or a small family office that manages 100, 200 million to write a $3 million check and make returns the same way that $1 billion fund would on a $300 million position, right?
So it's participation, basically.
It's participation. So we have created a way through security tokens that you can buy portions of the investment and be treated the same way. All people in the cap table get treated the same. Doesn't matter if they own 1% or if they own 50%. They get treated exactly the same way, right? So we've done. Now we have a biofuel deal, for example, for a company that's called World Class Holdings, and a company that's called Northwest Advanced Biofuel, and that's a very exciting deal as well, because what we did on that one is we put together a structure where this biofuel company is getting a loan that's going to be a 5-year note that gets repaid 100%, paying 11% interest a year on that note. Now,
they're using it to raise capital. They're borrowing money.
Correct. Now, what is the best thing out of what I just said? We put in a 7% cash incentive in that deal. That's in perpetuity, even after the debt is paid, right? So here you have.
Well, explain that. That's like an equity position? It's an equity sweetener of some sort?
It's not an equity position. It's a cash incentive that's equity-like. And the only reason I made it be structured not as equity is because if the company gets diluted, that 7% can become 1 very fast.
Right. That makes sense.
You see? So they gave me the option, if you take it as a cash incentive in perpetuity, we'll give you the non-dilution clause that you want, and your 7% will always be 7%. And that's what I wanted.
7% of what? Profits?
7% of profits.
Okay.
Okay. So now we have this jet biofuel company that has a contract with Delta Airlines to purchase 100% of their biofuel for the next 10 years, plus 2 5-year extensions.
Okay.
They have a commitment, or I will say a agreement with Stone Peak that within 24 months, Stone Peak is going to come in with 600 million. And we have senior position on that $65 million debt, which means they're going to pay us off because they're going to want senior position, right?
Right.
And after they pay us off, we now have the 7% in perpetuity that is non-dilutable. That's a beautiful deal.
So you still have the 7% even after
the debt is repaid.
So why would a company do that? Because they need to raise the money?
Well, so I'm looking for, I'm a problem solver, right?
Right.
ESG and is one of the things that passions me the most. So when this company approached us, they told me, Ed, the biggest problem in the ESG market is, unfortunately, you see, we have Stone Peak for round number 2, and we got another large financial institution for round number 3 coming in with 1.2 billion. But we don't have, we did a seed round. It got taken by Delta. We now need 65 million, but we're too small for the large funds.
Oh, is that the problem? They're looking to raise 65 million, and that's not, the large funds aren't interested in.
No. So they're like, there's this gap between large funds, and if we actually go and raise 600 million now, we're going to have to give them too much equity at the level we are. We need the 65 so we can actually raise at a higher valuation when we do the 600.
But this is a bond issue, right? I mean, they're issuing a bond.
They're not issuing a bond. So what we're doing is So we're doing, I structure it as a debt indenture. So it's a debt indenture that is a 5-year note, gets repaid 100%, and has a 7% cash incentive in perpetuity after the debt gets repaid.
So it's a debenture note. Okay. But it's debt. It's not equity. So
it's debt. It's not equity.
Right.
Now,
it's backed by the company. That's it.
It's backed by the company, and we have senior position, FYI.
Okay.
Right. So if they want to get debt,
they got to issue you more. Right. They got to keep you. Yeah.
Either they got to pay us off, which I believe that's what's going to happen, because we are at a smaller valuation than what they're happy with.
Right.
We're getting senior position. And we have this 11% interest, which is not cheap, right? So I believe that instead of letting us do more debt, they're going to take us out within the 24 months that we have a prepayment penalty for. So as soon as Stone Peak's money come in, I believe they're going to take the position that we have in our platform out.
So the family office, or maybe it's a multifamily office, their opportunity is that they're getting more on their money than they would in the marketplace, buying bonds or investing privately.
That's accurate. Because understand something, if I would have structured this how I used to structure before, a single family office will come and write up the whole $65 million check. Yeah. I sold it to one person. Now, a family office that has 300 million under management, 200 million under management, cannot write a $65 million.
No, it's
check.
Too big of the asset.
It's too big because it will be risky.
Too big of a
for
position
them.
To be in.
Correct.
Right.
It'd be risky for them. Yeah. Now, if I tell them that they can come in with 5 million or 1 million and have the same benefit as if they wrote a $65 million check, now we're talking.
Because the company that was raising the 65 million, they didn't want to do it in parts. They want to do it all at once. And you're raising the money to do it as a pool.
We're raising the money to do it as a pool and pretty much allowing people to come in and buy portions of it instead of having to buy the whole thing.
Okay. But they couldn't go directly to the company, as the company doesn't want to deal with the cap table of or the debentures.
They don't want to deal with any of that.
Piece.
No, they don't want to deal with any of that. And we put it in a security token that is on blockchain, register on the Reg 506C and Reg S.
Yeah.
And they have to be accredited. They have to go through AML.
Too?
Correct. Reg D filing. They have to do AML. They got to do KYC. They got to do accreditation. So we have created a platform to allow them to actually participate and get a seat at the big boys table without having to have the big boys checkbook. And that's pretty much the whole niche. What does
blockchain do how does that protect them?
Well, blockchain is pretty much, we are using blockchain to calculate the transactions, calculate the positions. The security tokens are on blockchain. So look at it as a stock that's on blockchain in simple terms. I'm going to keep it very simple here. Look at it as a stock that's on blockchain. So now insider trading, because after 12 months of issuance, they can trade their position, FYI, right?
Oh, but they just got to prove ownership. Blockchain protects ownership and chain of title.
Correct. So, and it's all done through an STO. So now you can go and sell security tokens at T0, for example, which is one of the STOs that we work with.
What does STO stand for?
So secondary trading markets, right? Or in the case of T0 has been around in the security token market space, exactly, right? So they are allowing secondary trading on positions that before did not have a secondary trading aspect. So here you have an opportunity to be able to not only participate in this type of deal, which before, if you rolled a $65 million check,
right,
you needed to write the whole deal. You needed to wait until the deal was finalized if you wanted to sell your position, and you needed to be in for the long haul. Here you have the advantage of being able to trade it, even though I don't believe there's going to be a lot of people trading their position because of the 7% cash incentive.
Right, you don't want to give that up, but it still adds it adds an element of liquidity to it if you need
It's
it.
a good option to have.
It reduces your risk, right?
Yeah, it's a good option to have.
Right. So how did you guys get started with this? This is through BPN or another company?
This is through BPN.
Okay.
And we started in 2018.
Okay.
I saw that I could do exactly what I used to do as a quantitative risk analyst for huge funds that had billions under management.
Right.
For the smaller guys that had maybe 100,000 to invest, or 500,000 to invest, 25,000 to invest.
Right.
And I mean, I created a structure in 2012 called the billionaire structure in real estate that makes 100% return day one.
100. How does that work?
Very simple. Let's say we're building a $1 billion tower, right?
Okay.
That $1 billion tower needs to have 20% of the cost to develop to be able to get senior debt.
Okay, so you need basically 20% down. What you need.
20% down, right? So before that 20% down will come in from a billionaire and we'll write the whole $200 million check.
Okay.
Now, in exchange for that 20%, my ask was we needed 40% of the equity of the entire project. So that means we come in day one with 20%, we get 40% of the equity of the entire project, meaning we get 100% return day one in equity in the position. And if a building costs $1 billion to build, obviously it's because it's going to be worth 1.5, 1.7 billion by the time it's finished.
Right.
So you have just made 100% the day you come in. By the time the deal is fully developed, you just made 150 to 200%.
Right.
Based on the new valuation of the development.
Because the 40% is now of the larger number.
Correct.
Real estate leverage.
Correct. So with that example, then we went to large financial institutions to get that. And my expertise in as a quant analyst was in commercial mortgage-backed securities or securities that were traded mainly in the secondary market. So I understand how banks underwrite more than many. So pretty much we were able to help the developers to get the debt at the best terms they could possibly get it at.
Huge deals though, big developments.
Big deals, big developments. So the only challenge the billionaire structure had was that the only people that could participate needed to be billionaires.
Right.
Because if you go to a family office that's managing 300 million, they're not going to be able to write a check if you need 200 or if you need 300. So that was the challenge. And now what we're doing, they can actually come into these deals and write a $5 million check, make 100% return based on their investment day one, and have all of the upside in the world when this development is finalized.
So let me take a step back a little bit, because we were talking about blast books, right? Coming out of school, and then you started studying with this guy, all the analysis that you do. How did that go from the little entrepreneur? I mean, I know you had 9 million and you dealt with Facebook, and that came to an end, to doing such large, complicated deals with these family offices. Where that, you don't just walk out one day and say, I'm going to do business with family offices, and they all call you and say, okay, Ed, we're in. You got to get into these groups. You got, how did that come about?
I started as a quant analyst. I got introduced to, because understand, we're underwriting risk on whatever they were going to put their money on. And in the majority of the time,
you were working for a company that did that?
I was working for a company back then, right?
Okay.
And pretty much that was the only purpose of that company, underwrite risk and do quantitative risk analysis for all of these funds and family offices that invested mainly in the secondary market.
Okay.
Right. And I learned how not only how the banking worked in the secondary market,
Right.
but also what the problems a lot of the funds had and why they needed to do some of the things that we were advising to do at that risk company, right?
Okay.
So after I started doing structures, so my first request and the first time that I got kind of out of doing risk analysis was a client that proposed it. So a client comes in and says, Ed, this is 2012.
Okay.
He says, Ed, I don't want to put my funds money with the banks anymore.
Because he's losing faith in what's going on with the banks?
Yes,
okay.
He's losing faith, and he goes,
right. Yeah, there's no FDIC insurance when you got billions of dollars.
Pretty much. So he goes, we want to be in a position where the bank's taking the majority of the risk. Because for now, we've been taking the majority of the risk whenever we buy their paper in the secondary market at a discount because they still manage the paper, right?
Okay.
So in simple terms, so the everyday person understands, when you get a mortgage, it's not the bank's money they're giving you, right? No. They package it and then sell it to a secondary investor. Right. And that guy holds the paper. Right. And the bank just manages that, right? When you make your mortgage
the bank's money
payment,
at the beginning, and then they give you the money, they take the paper and they sell it.
And they sell the paper.
That's why you sign those papers, and the name changes 3 weeks after this guy's servicing it. Somebody else is an investor. It's out in the world out there. You'll never stay with the same bank that you get a mortgage from. Yeah.
Correct.
That I understand. Okay.
Correct. So now you have a group that has been doing that for many years.
Okay.
Buying this instrument from the secondary market, from the largest banks,
right? From
the banks, and they won out.
And it's always a package, right? They always buy a package of mortgages, right?
Package of mortgages.
50 million, 100 million, whatever.
500 million, 3 billion, large numbers, right?
Yeah.
And our job was to underwrite risk on that.
Okay. Because you can't really see every mortgage that's in the package, right? It's hard to assess the risk without really getting into the quantitative analysis. Okay.
That's accurate. So pretty much now this client says, there's an opportunity for you outside of what you do. We like how you underwrite. You're very conservative, but at the same time, you're very creative. So we have X amount of dollars.
Right.
And we want out of the banking system. We want a more direct investment and help the development crisis that we're currently in at this point. So I go, okay. So they say, there's this amount of money that we're willing to put out and allow you to underwrite on, as long as the deals are very conservative and very profitable for us, and we're not the big risk taker. So I go, you came to the right guy. That's what I do. That's my
That's like the banks. They want to lend you money with no risk.
Yeah.
And first, they want you to put $1 million in the bank so they can lend you 800,000
on that million.
Right. Exactly. They have no risk.
Correct. So pretty much I sat. It took me about 3 weeks to come up with the structure. I saw what the problem in the development world was. In 2012, banks were very tight at lending.
Yeah.
They wanted you to have 20% liquid.
Yeah.
Okay. They didn't want it to see
because they were stupid. They got greedy before, and then they get burned, and then they back off, and that's always happens.
Yeah. So pretty much now there's this ton of development stock that cannot happen because there's not a lot of developers that have liquidity like that. Like if you're building $1 billion building, I mean, it's a hard asset. How are you going to pull out 200 million to then go to the next one? You don't do that. I mean, it's too expensive.
Right.
So I start talking to developers and asking them, what can I do for you? Like, what is your big problem? They go, well, there's two problems. First, everybody that wants to take over 51%. They want control. And they're coming in with the money we need to develop, right?
Right.
Second, that's a big risk for us because if they have 51%, we have 49%, but we're kind of unemployed now because if they decide they can fire us.
Yeah.
It's our own deal that we worked 9,
Right.
10 years to put together, do the entitlements, get this thing to where it's at, to get it pretty much ready to go and to break ground, and they can fire us. So I go, okay, that's challenge number one. Give me challenge number two. Well, challenge number two is banks pretty much, they're very tight. I mean, it's impossible to get debt in this market. So I go, I can solve both of your problems. Solution number one, I'm going to use the same numbers I used before. If you're building a $1 billion development, we're going to come in with 200 million. That means it's 20% of the cost of the development. We want 40% of the equity. Hence, you, the developer, hold control at 60% in the cap table. Oh my God, that's fantastic. We'll do that deal every day. Okay, that's great. Second solution is we understand how banks underwrite and we understand how their papers need to look so they can move it in the secondary market.
Right. It's got to be clean a certain way. Yeah.
So we're gonna go ahead and become your broker and help you prepare the package to get the debt. Fantastic. You're gonna resolve all of our problems.
Now these are the developers, right?
These are the developers. So now I go back to the hedge fund and I tell them,
Hedge fund's the family office, basically?
No, this was a hedge fund directly. It was not a family office. It was a fund that had a lot of money under management. And they were the ones that kind of put me up to this because they wanted out of the banking system.
So they had a lot of investors in hedge funds.
That's accurate. That's accurate. So when I go to them, and I tell them this, they're like, you're kidding. And I go, no, I'm not. I can get you 100% return.
Right.
Day one, with about 50 to 70% upside within 3 to 5 years.
Well, because once the building's developed, the value goes up. Yeah.
Correct. Not only that, guess who's going to do and take 65% of the risk? And they go, who? The bank. So they loved it. They're like, you just put us in the position that we wanted to be in. Because now our exposure is only 20%. And a bank's exposure is 65% on the deal. And guess what? Yeah, the bank's going to make 5, 6, 7% on the money. We're making 100% return they want in equity. And we have an upside between 50 to 70% while this thing is developed. And we have the smallest amount of risk, the smallest amount of, I would say, exposure into the deal. So we did that multiple times. And again, now we have deals exactly structured as I just mentioned, but family offices that can write a $1 to $5 million check can come in, which before the only people that could participate were those that could write a $200 million check.
And you're only underwriting real estate deals, right? You're working with builder developers or no?
No. Well, again, that deal that I just mentioned a little earlier ago with Delta, that is an ESG jet biofuel deal, right?
Oh, right. You said that.
So the only requirement for us to look at a deal is it has to pass a quantitative risk analysis. If we look at your company and you come to us and say, I need $5 million, and we run a quantitative risk analysis and it rates a 7 out of 10, we're talking. We can work with you.
Okay.
If it rates below a 7, I'm sorry, we can't do much for you. If it rates a 6, we might be able to get you debt from a bank because they underwrite similar based on a 6 if you compare it to what we're doing. So we have deals in the CBD space. There's a big challenge in the CBD space. Sure. Right. Correct. So we have
not a lot of people that want to lend to companies. How about cannabis? Is that a problem because it's
cannabis we're still not dealing with because of the regulation, because it's not federally approved.
Right.
But in the hemp CBD space, where we have a structure today that paid 9.5% interest a year, and it's a convertible note. It converts by year number 3 into equity into the company, which for an investor that's writing a $5, $50, $100,000 check, making 9.5% on your money a year is not bad at all.
No, that's a lot, and with low risk.
With very low risk.
You have to take a lot of risk to get those kind of returns.
Correct. So that's our model. How can we bring small family offices and family offices and accredited investors, these opportunities that before were only reserved for billionaires.
Right.
And that we used to structure before only for those that had those big checks that they could write. That's what we're doing at BPN, and we're doing it in any industry pretty much.
Okay, so let me ask you this question. Let's get out of the weeds a little bit with regard to the technicalities of the deals. From a business standpoint, how do you do business development, right? You have to find the deals, and then you got to find the investors. So how do you guys go about doing that?
So we have, in the investor side, we have partnered with investment banks, broker dealers,
Okay,
investment advisors,
that bring
funds.
you accredited people and family
Yeah,
offices and
yeah,
stuff like that, because they're all looking
yeah.
for deals.
Yeah, that's
Okay.
accurate. That's accurate. So that's what we've done there, right?
What
And
about the other
when-
side?
when they see what we put together, they're like, get out of here. You're out of your mind. We can sell this anytime.
Right,
And the challenge those time is a single institution want it all. Ed, we want exclusivity. We want to take
yeah,
everything.
no, you're not doing it.
And that's not what we're doing. That's not what I created this for,
Right,
right? That defeats the purpose of what we've done. So, and then in the other side, I can say I've been blessed, right? Because in 2018, when I started BPN, I went through over 350 people that I interviewed personally to put together the team that I put together for BPN.
how many guys you got in BPN?
In the board, we got 16 people.
16 on the board? And how
Yes.
many employees and, you
So
know,
between employees and contractors, we're about 43.
oh, not a huge group. Okay.
Yeah.
Yeah,
And
so you're a
then
tight-knit
we
group.
have, correct. And then we have
And
people
you
that
have
are
in-house analyst, you
subcontractors.
don't do the analysis yourself now, so you have
No,
in-house
no.
analysts
So
and stuff?
I have quantitative risk analysts that I have met through my life that
That
have
you've
their own firm, and that's what
Pick
they
them
do.
by your hand. Oh, so they're
Pretty much.
subcontracted out.
Yeah. We're subcontract them, and pretty much they understand how this whole thing works because they've been at it for a long time. Now, on getting the businesses,
Yeah.
that's the easy part,
Oh,
because
okay, sure, it's all easy.
thanks to the relationships that I have cultivated through all of these years, it's like everything I've done in life was to lead me up to this.
Seems
Like
that
all-
way, right?
All of the realms set together, and we're like, here it is, we're up for the taking. So after I put this board together, I got people in the board that is like, how people ask me sometimes, how you get this guy to come into your board?
Right, so you got some really high-powered people.
Very high power
Well,
people.
because
I
you
mean,
asked them probably, right?
not only because I asked them, but because when I ask, I ask very straightforward. I mean, I don't sell crap to anybody. I give you an
Right.
example.
Well, you're a smart
The-
guy, and, you know, not
the
all these guys
hardest-
are.
Yeah, the hardest guy that I would say harder to recruit was Jay Elliott, the ex-VP of Apple, right?
Okay,
So I get put together with Jay on a call. Jay's retired, well off. He's in his 80s. He
Right.
doesn't need to do anything,
right.
right? So here
It's
he
fun
has,
for him, right?
yeah, here he has this kid that gets introduced to him by the ex-VP of Citigroup. And the SVP of Citigroup just tells this guy, this is the smartest guy I ever met,
Right.
and you need to talk to him. So I get put in the phone with Jay, and Jay, right up the top, tells me, you got 5 minutes. Tell me what you will want to do with me, and what is it? And it's like, I don't need 5 minutes. It's very simple. I have something that could change the world. The financial system that we're currently on, it's totally crap. And there's a lot of opportunities at the top that don't ever get to the bottom. And I'm going to do what you guys did to IBM in the 80s and 90s, I'm going to do to the financial markets. And we're going to do it through blockchain. And you've done it already. And I would love for you to be my team. So he said that it was 5 minutes I had. That ended up being a 2-hour conversation.
Right. Everybody says they got
And-
5 minutes till they're interested. right?
Yeah.
And they got all the time in the world.
Yeah. So that became a 2-hour conversation. And then he became my mentor, right? This is a guy that was mentor to Steve Jobs.
Right.
And truly understand how what I'm doing could be done, because he's done it. You see, this is one of the guys that when Steve got caught off of Apple, he got caught off too, because he was that close with Steve, right? So, and he was their SVP at that time, right? So that was one of the hardest guys to get in. But aside from that, we have, again, people that were in investment banking, people that have worked for large financial institutions, real estate moguls, real estate brokers that have brokerages with 500,000 real estate agents.
Right, big, and they're doing, and they have access to big deals and stuff.
Correct. So, and that's how our deal flow comes in, because we do a board meeting every 2 months, and every time we meet and talk, there is a ton of deals that we can have access to, and we put through our system. And if you pass a quantitative risk analysis, we're willing to look at. Today,
what's the deal size from small to large? What's the smallest deal you've ever done?
as small as we'll take is 5 million.
Okay.
Largest, there's no limit. We can handle any size. For example, we signed a contract a couple weeks ago with a gold family for $64 billion.
Okay.
And we're going to
raise them $64 billion?
Yes.
Okay.
And their collateral is going to be gold.
Okay. Well, that's good collateral, right?
Yeah, that's great collateral.
Right. Exactly. Well, I mean, there's a market to gold. It goes up, it goes down, but generally,
that's great collateral. And in real estate today, structures that have passed our quantitative risk analysis, we have close to 17 billion. And we have in New York, LA, Miami, Middle Beach, North Carolina, South Carolina, Dominican Republic. Now we're looking something with in a couple of the Caribbean islands as well. We got a robotics company out of Singapore, fintech, and
all kinds of stuff.
Health tech.
So you don't have, you're not like a fund.
No, we're not.
You have accredited investors and things investing in separate deals, right?
That's accurate.
Everything stands alone.
That's accurate. And what we're doing is we're allowing people to have access to it. Doesn't matter if your checkbook has 5 million or if it has 5 billion.
You can still participate.
You can still participate, which is what I believe was missing in the marketplace. Because the reality is, in my days as a real estate agent, my clients were happy with 10% return. 10% was like, oh my God, you knocked it out of the ball.
Right.
And here I get then introduced as a quant to stuff that could make 100% return day one.
Right.
With an upside.
Then they don't like the 10% if they see they can get 100.
Of course. But then the challenge was, anytime you told one of the big guys, hey, can you allow this little family office to come in with 5 million? No, like, why would we do that? It makes no sense. And I'm like, well, but we can do more deals if we do this, right? Like, if your fund has 5 billion and you take 10% out of the 20 and allow small family offices to take the other 10, now we can do this all over again and do more. And they're like, yeah, Ed, we don't care, man. We like it. We love what you're done.
But the numbers are too small.
The number, we don't want those guys.
Right.
Like, we know what we know. Let us do what we do.
So you basically found a hole in the market.
Pretty much. I found a hole that needs fixing. Because if you ask 100 family offices if they will like the type of deal I just told you, the 100, after they understand it, will answer yes.
Right.
And they will tell you they have tried to get into a deal like this to find out later on that they couldn't because the larger fund said no.
Got it. And they didn't think there was a way to get in, right?
And they didn't think there was a way to get in until they came to us. And they either meet us through an investment bank, through a broker dealer, through a financial advisor, and that's the rest. That's the rest of the story, pretty much.
Okay. Well, I guess we'll have to leave it there, and you and I'll stay in touch and talk about things. But I appreciate you coming on. If people want to learn more about you and interact with you and learn about what you guys are doing, how it's the best way to find you.
Yeah, they can go to our website, www.bpncapitalgroup.io.
Capital Group,
And
group spelled out.
group spelled out.
Okay, we'll put a
capital
link
group.
in the show notes too. Okay.
Yeah, yeah. And then I'm very active in LinkedIn. So if anyone messages me in LinkedIn, even though sometimes it can take a little bit, I'll answer. I read every single LinkedIn
So you're always on.
message.
So it's Edward Rodriguez, BPN. They could search and they'll find you.
If they search for Erod, E-R-O-D,
okay,
they'll find me. I'm a big Alex Rodriguez fan, and I used to play baseball.
Okay.
And I'm
So most
Edward
people from
Rodriguez.
Dominican Republic play baseball.
Edward
baseball.
Rodriguez. So the nickname of Erod caught up when Alex was killing it in the MLB because I had a very good batting average, and I was trying to do everything like Alex. You know, I mean, I admire the guy, and the nickname stuck.
Yeah, that's funny. When we played golf in the Dominican Republic and we had our caddies and we were talking to them, and I said, you know, this, you know, the off season. He says, well, we're in the off season. I said, oh, you play baseball? He says, man, everybody here plays baseball. Like that's
true.
There's nobody who doesn't play baseball.
That's true. Everybody plays baseball.
Right.
Even through my adult life, because in our eyes, baseball is God's sport. That's how we see it.
Yeah, it's like a religion down there.
Yeah, for us, it's nothing else. It's God's sport. So
it's like soccer in South America.
You got it.
Yeah,
you got it. It's like soccer in South America. So pretty much, I sometimes even still play baseball on the weekends, Sundays or Saturday.
Well, Ed, I know it took us a while to get together, and you know, thanks for coming on and spending time explaining all the stuff. I'm sure a lot of people, some people's heads are spinning. Some people are like, "Wow, I want to learn more." So, hopefully, there's people out there, especially if you're accredited investors, you represent a family office, a large, wealthy family. They should look you up and see what's going on, right?
Fantastic. They could also see all of the deals we currently have active. We post a lot on social media, like in LinkedIn mainly. They could go and see the links in our website as well. And again, I mean, we're not selling anything. We just want them to look at what we're doing. And after they see, they make their decision if they want to participate or not. It's totally up to them to see if they see potential on the kind of deals we're putting together. Now they have an option that a lot of them have always asked for a seat at the table. Now you got it.
Right.
Are you going to take advantage of it? Totally your choice.
All right, Ed, thanks so much for your time. I appreciate you coming on.
Thank you, my friend. Highly appreciate it. Thank you for having me.